Hey everyone, welcome back to Market Edge, ahead of the trade. Owen Larson here from Mission Winners, and today we need to talk about what's really happening in this market. Right now, conditions are shifting. We're seeing some stocks push higher, but at the same time, breakouts are failing, reversals are happening at key levels, and capital is flowing into defensive sectors. In this kind of environment, traders who don't adapt end up frustrated and chopped up. So let's take a step back and look at the big picture.
So let's go in here and take a look. This is the S&P 500, the spiders, weekly on the left, daily on the right. This is a great template. I developed this years ago, and I love it. What looks good on one time frame might not look good on the other, and vice versa. So again, weekly on the left, daily on the right. And you can see it just still basing here on the weekly, and that's fine. But notice here on the daily, it runs up and it lifts off. But what was the red flag on this bar when it was lifting off? There wasn't a lot of volume. Volume is power that lifts the ship off the launch pad. Didn't have much power. And then they start to take it down on a slight pick in volume. And then Friday, they spanked it pretty hard. So it's telling us they're selling into it. We just have to wait. Maybe that's going to change this week. But at this point in time, it just says be cautious. Let's move on. QQQ, NASDAQ 100, looked decent on the weekly, gapped up, and then reversed down on a slight pickup in volume. And note here on the daily, when it was breaking out above these clean tops, there's no volume. There's no conviction. Again, volume tells us other people see what we see and they're acting on it. They're buying. Well, guess what? They ain't acting on it here. And then they took it down. Told you to be careful. Were we buying in here? No, to be honest, we did very little or no buying this week. I mean, very small, if at all. Okay. The action wasn't there. We don't have to forecast. We let price and volume tell us. Here we go. Let's move on. ARK, innovation, technology, major index ETF, technology, gaps up, lifts off on the weekly and then gaps up and they slap it right back down. Look at the daily. Gap up. There's a moral right here in this lesson. Be careful chasing gap ups. Be careful. If you do buy a gap up, go smaller. The next day, it gaps up again, runs up and reverses down, and then they knocked it hard, and it's back into the base on increasing volume. What does that tell you? ARK innovation, technology related. Be careful with technology. Next generation internet. Same situation. Weekly, daily. Lifts up. Volume was decent, but then it just starts to roll over. Now you can say, Pat, here's something though. Look when it was falling here. Volume was much less than it was when it was going up. I agree, and that's a good analysis right there. But what's the final foundation arbiter for what we do? It ain't volume, it's price. And it can be falling on no volume, but if it's falling, and you got to get out, okay? And never argue with price. Another very key point, this is why I love simple basis. Price is good above alignment, bad below. Helps you keep losses much smaller. There we go. By the way, I'll tell you this, and I've been doing this a long time. I don't look at 5-minute charts. I rarely look at 10-minute charts, okay? Primarily, I'm looking at the daily, the weekly, maybe hourly. That's it. And I don't day trade either, okay? Now, that's just me. If you do and it's working, good for you. Good. All right. Biotechnology sloppy. You can say, boy, it didn't look too bad here on the weekly or in the daily here, Pat. Look at the weekly. This is why I love this template. You look at this and say, oh, this is breaking out. Well, when it was breaking out, there was no volume. First off, that's a problem. Nothing to do with it. They slapped it right back down. Then you look at the daily breaking through here, same spot, okay? Look at where it is on the weekly chart. Look at all the overhead supply. Buy stocks when they have the wind at their back in all respects. It will really help you. And have the discipline to wait for it. Yeah, here we go. Continue onwards. Energy's kind of base in here, direction energy, but still a lot of chop here on the weekly. Needs to maybe form a base here and lift off. And I'll draw this to help you. Right in here. But again, it's down low, folks. Look at the weekly. It's not a great setup here. Be cautious. Dow Jones Internet? Yeah, boy, oh boy, look at that. When they don't like them, they don't like them. And there's another important lesson right here for everybody. And again, I was running money through the crash of '87, okay, folks? So yeah, I've seen all this stuff. Man, a lot of money. And we were out, by the way. All my clients, all my managed accounts were out before the crash. I'm thankful for that, let me tell you. Woo! And I credit Martin Zweig, who I met a couple of times, had a profound impact on me in that respect. So anyway, and you know what else? Just getting in line with price and volume. That's it. It tells us most of what we need to know. So not saying be ignorant of the news, though, especially when it comes to earnings, etc. This is rolling over. First, internet, be cautious with internet. I'll go a little faster here so it's ending. IBD 50. This is a great proxy. I mean, the IBD 50 is a great list of stocks. Good stocks. But look at what it's doing here. It's dropping like a dang rock on an increase in volume on the weekly and day. Be cautious with that. Let's move on. I mean, that's a powerful statement right there, folks. Gold miners kind of hanging in, but it's dropping down here a little bit too. Okay, there's no real clean entry on it at all. Kind of been trending up nicely, and that's good to see, but it fell on increasing volume on Friday. I wouldn't buy it here. If you own it, I'd sell a little bit off. There's GLD. See that simple base on the weekly? Same things on the daily. This was on the key list. And it's trending nicely. Have sold a little bit into strength, and now we're in great shape. If it starts to lose the ADMA, we'll sell more. And it'll tell us what to do. There we go. So yeah, that's one we've got. Hack, don't own it. Look at that. That's kind of getting hacked down for right now. Cybersecurity, dropping here. The trend is still up, but it needs to settle down. There's no clean entry on it at this point in time. Be cautious. They're selling it. Biotechnology's kind of loose, little loose in here, whipping around. Okay, reversal bar here. Not a clean entry on it. Be careful there. Loose patterns indicate high investor emotions, and high investor emotions and good decision making are mutually exclusive. High emotions and good decision making in all realms of life are mutually exclusive. Okay. Continue onwards. IBUY, online retail. They're taking that one down too. Got to be careful with online retail. Software. Oh, look at software. Dropping here. Got to be cautious with software. Medicine's kind of hanging in here, right? IHI. You can see these tops across here. I'll draw this to help you. Medicine. Now, what's medicine in relation to what kind of an industry it is? It's kind of a defensive industry, folks. There's a lot of things we don't need. We don't need cars. We don't need, well, we need to have a car, but you know what I'm saying. You don't need to buy a new car unless something's wrong with it. But it's one thing that's mandatory. Medicine. You got to take care of yourself. I need some new shoes, but I'll wait on it. Yeah, but I've been kind of sick, but I ain't going to go to the doctor. No, you take care of yourselves. Well, this one's a defensive, and it's kind of hanging in there. Tells you something there. Look at this, mid-cap. Ooh, they're spanking it. Mid-cap tells you to be cautious with mid-cap stocks, too. Aerospace defense, nothing there. Leave it alone. Home construction, dropping, leave it alone. We had a great run in this back in here. Wow, was that nice on the weekly? Look at that. Wait, base right there. That was a good run. Now it's sloppy. We have to leave it alone. Let's continue onwards. S&P growth. Look at this thing dropping here. Look at the distribution in here. It's telling you, be cautious. And it has been. You see how wide and loose this is? This will chew you up. Wide and loose charts, again, indicate high investor emotions. Stay away from that, all right? Because those emotions, people start whipping all over the place. You'll get chewed up in their frenzy, and you don't want that. I love this quote, and it's a fact in all realms of life, including investing. Only the still pool reflects the stars. I think that's a profound thought. Only the still pool reflects the stars. Here we go, small caps. Ooh, that ain't so good. Be careful with small caps. Real estate, kind of hanging in here. You can see this base right here. I'll draw this to help you. Just a simple flat line, okay? But you look and you go, hey, a lot of big green volume bars in here, Pat. There's one there, okay? This one, but that's really not that great of a, it actually closed below where it opened. There's not a lot of accumulation. Then you look at the weekly and go, I don't see a lot of big green volume bars in here on the weekly either. Yeah, just be cautious. There we go. Continue onward. Transportation, they spanked it on Friday. Be careful with transports. That's all. Here's another classic lesson. Market's been sloppy. Oh, this baby's going. This baby's going. Take a look at this bar. And we're going to do a valuable lesson for, I used to do the IBD meetups. Look at that. Oh, it's going up, man. This baby's going to break out. It's going up on steadily decreasing volume. The buying power is drying up. They ain't chasing it. They're not buying it. Okay? And then you get that. And, that tells you, be cautious. Continue onwards. That's called a haircut in the business. There we go. Airlines, grounded. Leave them alone. Banking, they need a loan. There's nothing to do with them. Boy, I'm in prime dad humor time now, right? Insurance, it's just basing. It doesn't look too bad, but it needs to go across these tops. Kind of a defensive sector, isn't it? They're defensive. Think about that. Regional banking, there's no power there. Mid-cap, really lagging. Look at that. Says be careful with mid-cap. By the way, please don't think, oh, Pat Walker's all negative. No, gosh, no. I love buying stocks. I'm not kidding. There's nothing else I'd rather do. But if it ain't there, it ain't there. That's that's a profound thought, isn't it? You could say that to your kids. Kids, I heard this on the internet. I wanted to share it with you. If it ain't there, it ain't there. And they'll just shake their heads and walk away. Have fun. Of course, I know what that's like. I got 4 kids running around. I got 4 grandkids running around. Baby, oil services, nothing there. Be careful. Pharmaceuticals. Oh, now that doesn't look too bad, does it? Kind of picking up. Now think about this. The market's kind of sloppy. Well, I don't need that. I don't need that. What's one thing that as a society, well, everywhere, pharmaceuticals, right? I don't know, drugs. No, I don't say pharmaceuticals for your health. It's a defensive sector. There's a lot of things you can go without, but you can't go without taking care of yourself. You can't go without having good health. And it's kind of a defensive sector, something maybe look into, to watch, PPH. But note this, it's a little bit extended in price up here. Be careful. But this is also intriguing. I was talking about defensive. Look at the volume that came into it. People saw that and acted on it. There you go. That's the stuff we do. NASDAQ 100, QQQ starts to lift up and they slapped it right back down on a pickup in volume. Till it takes out that line, watch out. Continue over, QLD, look at that. Look at it, runs up there and they slap it down. Be careful. They're selling it. Retailing, not a lot of power there. See that drop? Be careful with retail. Cloud computing. Yeah, it looks like it's raining to me. Now you all are just shaking your head. Oh boy. Yeah, that's dad humor for sure. But you can see it's dropping here. Be cautious with cloud computing. Continue onward. Silver's kind of hanging in there. You can see, and you can see it on the daily. And then you look at the weekly and say, maybe it's forming a little pennant right here. Something to watch. But notice, it gapped up and reversed down here. Gapped up and fell down here again. It needs to form a better base and then lift off with volume. And we have the discipline to wait for it. Still lagging. Look at all the overhead supply. This is why I love this template. You say, well, it doesn't look too bad on the daily down here. Look at the weekly. No, there's nothing there. Tons of overhead supply. Stay away. Leave it alone. SMH, kind of choppy here. Needs to show more power above here. Until that happens, be cautious with it. Same thing's true with SOXL. They knocked it pretty hard on Friday. SSO goes up, runs up. And this is what's interesting. This lifts up, but there were very few stocks that were pushing through simple bases. Were we buying this week? No, it wasn't there. It was telling us. It's not like, oh, you got a crystal ball. No, it's just looking at the indices and looking at the leading stocks and say, well, it's going up a little bit, but there's no power with it. We leave it alone. Power is measured by volume, backed, price backed by volume. This dropped again here, closing near the lows. There's a lot of tail bars in here, whipping all over the place, indicates high investor emotions, be cautious. Solar, too much overhead. You can say, well, that don't look too bad. Look at the weekly chart. Look at all that overhead supply. Stay away from solar. Done. Small caps, lagging. Look at that. Stay away from small caps. Oil services, a lot of overhead supply, stay away from it. Aerospace and defense, there's nothing there. By the way, you can say, boy, you went quick through these. If it's not there, it's not there. I don't try to make something out of nothing. We have a limited amount of time and we want to use it wisely. Let's focus our energies on opportunity. And if it's not opportunity, go to the next one. There's nothing here. You won't find this chart. You won't find this in Bill O'Neill's book, How to Make Money in Stocks, which is a great book. Man, changed my life. You won't find this set up in any book or saying, oh yeah, this is what you look for. No, you won't find it in anybody's book. And if you do, I wouldn't read that book. Now, that's if you're going long, okay? Short, that's a different story. By the way, people say, well, let's go short, let's go short. Folks, I will tell you, until you've mastered the science of being a successful long investor, don't switch gears too much going into the short side, okay? You'll lose progress on the things that you've learned, okay? Biotechnology lagging, home builders lagging, leave it alone. Materials to build homes lagging, leave it alone. Communications was lifting, but it's starting to get hit here pretty hard. Be careful with it. Energy's kind of basing, but not a lot of power. Financials rolling down on increasing volume, leave it alone. Industrials dropping down on increasing volume, leave it alone. Technology was acting fine. I mean, look at, I'll put this line, there was a line here. We'll get rid of that one. And we'll do this. I'm going to get rid of these. And I'll just show you this to help. There you go. You got some clean tops across there, don't you? And it's the same thing on the daily. It lifted off. Now look at this bar here. It lifted above here, but how was the volume? There was no volume. There was no power there. And then it starts to drop on a slight pickup in volume, and then they hit it hard on Friday. It was telling you. And it says, well, I'm glad I didn't buy that ETF. But extrapolate the knowledge base. At Mission Winners, this is what we teach. This is what I taught at the IBD meetups. Connecting the dots. If you see an ETF that's getting spanked pretty hard, be careful with the stocks in that group. Okay, that'll help you right there. Continue onward. Consumer staples are picking up here a little bit. What is this? This is kind of a defensive sector, folks. Okay, consumer staples. What's a consumer staple? Toilet paper. I mean, let's lay it out there. You don't need a lot of things, but you need toilet paper. And if you don't, I ain't going to shake your hand. Anyway, you can see it's picking up a little bit. A defensive sector. Is there a real entry spot on this now? Not really. Not really. But it does show there's some defensive action there. Utilities, kind of defensive also, but not a really clean entry. Maybe across these tops right here. But it's utilities, it's slow and ponderous. I rarely do get involved with utilities. Okay. Healthcare, not a lot of power, leave it alone. Consumers lagging. Consumer discretionary. See this? We did consumer staples. Discretionary. Stuff you don't have to have. Okay. And it's kind of rolling down here. Okay. It says be cautious. Metals and mining, way too much overhead, dropped pretty hard here. As you can see. We're going to clean this here. And then we're going to clean this here. There you go. Boom. Be cautious with that. That's selling. That's institutional selling. Metals and mining, stay away. Energy, exploration, choppy, leave it alone. Retailing. Interesting now. Think about this. Boy, the retailers are getting hurt. Okay. What does that say? The consumers pulled back a little bit. I'm not getting all doom and gloom. Good Lord, no. Okay. But it's just saying, be cautious with retail stocks. There we go. You don't have to overthink it. Done.
Thanks, Pat. All right, so what does all of that tell us? The market isn't offering a clear trend right now. We're seeing failed breakouts, defensive sector strength, and hesitation at key resistance levels. And this is where traders run into trouble. They start forcing trades, buying every breakout, and before they know it, they're getting stopped out over and over again. This is the definition of a choppy market, and it requires a different approach. Let's take a minute to talk about how to recognize these conditions early and what adjustments you need to make to avoid getting caught. One of the biggest mistakes traders make is assuming that every breakout is the start of a new trend. You see price pushing higher, you think, all right, this is the move, and then suddenly it reverses right back down. Sound familiar? That's because in choppy markets, breakouts don't stick. They run up just enough to look promising, but without strong buying behind them, they fade just as fast. So how do you know when the market is shifting into this kind of environment? One of the first signs is failed breakouts with weak follow-through. If stocks keep breaking out and reversing within a day or two, it's a red flag that institutions aren't stepping in with conviction. We saw this exact pattern in SPY and QQQ. They attempted to push higher, but volume wasn't there, and by the end of the day, they reversed. That's not bullish action. Another key signal is overhead supply. When a market or stock keeps testing the same high but struggles to break through, it means sellers are sitting at those levels. Every time price runs up, those trapped buyers from previous failed moves are unloading their positions. That creates resistance and makes it harder for stocks to sustain momentum. Then there's sector rotation. When traders start moving into areas like consumer staples and healthcare while growth stocks are lagging, that tells you something. These defensive plays don't attract big money unless there's uncertainty about the broader market. If capital is flowing there instead of into tech or high growth names, it's a sign that risk appetite is fading. And finally, one of the biggest indicators is trend line and moving average breaks. When major indexes fall below key levels like the 8-day and 21-day EMAs, that's a shift in momentum. In strong markets, these areas act as support, but when they fail, it means sellers are in control. So, if the market is choppy, how do you trade it? First, cut your position sizes. This isn't the time to go all in. Instead of taking full-size trades, scale in smaller and add only if the trade starts working in your favor. Next, take quicker profits. In strong trends, we can let trades run, but in choppy markets, waiting too long gives those gains right back. If you get a move in your favor, don't hesitate to lock in some profits. Another key adjustment is to avoid chasing breakouts. Instead of buying at new highs, look for tight pullbacks to key support levels. These setups tend to be lower risk because you're not buying into an extended move. And above all, be patient. If the market isn't giving you clean setups, don't force trades. The best traders know when to sit back and wait. You're better off taking fewer trades and keeping your confidence intact than trying to fight a difficult market. With that in mind, let's turn our attention to the max list and see what Patrick has to say about those stocks.
So here's Apple. Apple starts to lift up, okay? And again, weekly on the left, daily on the right, lifts up and pulls right back. It looks like it was going to take out these tops across here, but there was no power and the market was sloppy. Again, the M and mission winners, the markets. If the market's not doing good, I don't force buys. And I tell our VIPs, hey, be cautious, be a little cautious here. So did we buy Apple? No. No, we didn't. There wasn't enough power in the stock. There wasn't enough power in the markets. We leave it alone. I love to do this when the wind is at my back. Here we go. Let's move on to the good stuff. Off to the races. Amazon. Yeah, it's going down the river. Okay, people are shaking their heads, and I say, yep, that's dad humor. Okay, it's just dropping here. See, I was a scout leader for years, okay? And so that's the kind of goofy humor I used to use with the scouts, the Boy Scouts. And I thought this was kind of neat. If you were getting your Eagle Scout in West St. Louis County, the last person you saw was me. I wasn't a jerk, but I had high expectations with just a good thing. So anyway, this is dropping here. Okay, what does it tell us? Stay away from Amazon. Leave it alone. Let's move on. AMZU. This is an extension of Amazon. It's below the moving averages. Leave it alone. I'm going to pause here and share something. I'm going to go back to Amazon, the common, and just say this. The air is better. This sounds simple, but it's a fact. The air is better above a rising 50-day moving average line. And right here, it's below the 50. There's nothing to do with it at this time. We just have to wait. That's all. Now, maybe it's going to form a higher low setup or something. We'll watch and we'll be ready. That's all. Till then, nothing to do with it. Wanted to share that with you. AMZU, same situation. Alibaba. Alibaba is owned. You see this simple base right here? I'll draw this for you. You see that simple base? See the volume that came to it on that bar? It's a max list stock, and it lifted off, and it's still working. Look at that, it's 40 points in a crummy market. Notice I kept it clean. I said crummy. I could have used other words, but I didn't. But by gum, I could. Anyway, some of you go, yeah, at this time you probably could, Pat. Anyway, running up here, it's in great shape. Now, here's a valuable lesson, okay? You could say, I don't own it, man. That just ticks me off. Why are you talking about it? Let's turn a negative into positive. Folks, successful people take negatives and turn them into positives. That's you, okay? So you say, okay, I missed this one. What will you do next time? Key on this simple base, and if it starts to lift up on volume and follow through, you could buy some. Do you buy a lot? No, but at least you're involved with it, okay? And then if it continues, you could add a little bit more to it, less than what you currently own. Notice on this bar, when it starts to pick up, volume slightly picks up. This is the 8-period exponential moving average line. Look at the trend here. It's working. And again, this is a MAXLIST stock. This was a keyless stock for buy. This was on the key list to buy, and it was bought. Members bought it, and it's working. There you go. Now, I'll also temper it with this statement. Please don't get emotional and chase it up here, all right? No, don't chase price, folks. Buy at the pivot or near the pivot, or don't buy it at all. Chasing price is an emotional decision, and high emotions and good investing, as I've said numerous times, are mutually exclusive. We're in good shape with Baba. We're going to leave it alone. Baba ran. How about that? BIDU, sloppy chop right there. Stay away from it. I don't like when they gap down on heavy volume here, folks. Baba's loose. BIDU is loose. Stay away from it. Goldman Sachs starts to lift up, and they slap it right back down. We owned this, and we sold it and took the gain. Gone. Done. Flat. I'm not going to argue with it. Nothing to do with it. MasterCard. Now we got another line here. That's an old line. So watch this. That's close enough right there. Simple base, folks. Needs to take that out. However, note, it went up. This is a great lesson. Watch this. Oh, look, Pat. It's going up. Yeah. Oh, look. It went up, but it went up uneven, and it closed, right here. Closed, but not a lot of buying power there. Red bar. And it closed below the previous day's close. It was met with selling. And then it rolls right back down. What does this tell you? This is the resistance line right there on MasterCard. It needs to take that out, and it needs to take that out with volume. And until it does, there's nothing to do with it. There you go. Also notice this, another valuable lesson. It's falling on increasing volume. By the way, this stuff I teach here, this is what I do all day, every day with our members. These are the things we teach. It's a knowledge base. I mean, knowing what to do, knowing what to look for, and knowing what to do. Man, that's huge. I love this stuff. Nothing else I'd rather do. People say, man, it's just kind of a grind. At times it is. And then you do other stuff. You go for bike rides. Meta's been a great trend right here. Look at that base breakout right there. That we talked a lot about. I mean, look at this. I talked about this, I think, 6 times with our member. We made videos on this before it broke out. Hey, you might want to watch Meta. And that's a sweet potato pie move. Then it's starting to drop. What do you think we did? We were selling into strength, and we were selling more as it's starting to fall. And accept this fact. We're not going to sell at the high up here. I don't know what the high is until after it happens. But you get what you can, and you be happy. We sold some more. We're in good shape. Keeps falling. We will lock in more profits. We'll watch and see. It'll tell us what to do. I noticed it did fall on a slight pickup in volume. Those are catalysts to take action, and we have been. Microsoft, nothing there. Leave it alone. Netflix started to lift up, came right back down, locked her out, done. Nothing to do with it. Made a little money there, I do believe. NVIDIA's chopping around. Here's a great lesson. This is a really great lesson for everybody. Oh, it's a green bar on pickup and volume. That's a good bar, Pat. Boy, oh boy, we're ready to rock. Take a look at it here. It gaps up, it runs up, and closes below where it opens. Folks, it was met with selling pressure. A little choppy here until it settles down. There's nothing to do with it. In fact, folks, I'll say it again. The M in mission winners, markets. The markets are sloppy. Be cautious. Let's move on. Here we are. NVDL, derivative of NVIDIA, nothing there. Leave it alone. Tesla. There's nothing here, folks. It's below all the moving averages. But here's why I love the weekly, and I leave this up. See that weekly base breakout right there? We owned that back there. Look at that run. There you go. And riding it. That's where money is made, okay? Right here, there's nothing there. Leave it alone. Done. Continue onwards. TSLL, that's a derivative. Nothing to do with it. By the way, I point this out. This will help you. You might want to take note of TSLL. It's just like owning Tesla, common, but it's much lower priced and it's plenty liquid, folks. You know, the stock does what? 50 million shares a day? It's plenty liquid. If you don't have the money to buy Tesla at 337 bucks, okay, you could buy TSLL at 20-some bucks. Don't buy it now, though. Don't buy either of them now. But I'm just pointing out, TSLL, it's fluid. I wanted to share that with you just to help. And then Visa starts to lift up, had a nice run. There's nothing to do with it now. Just shows you more distribution in a lot of different areas. XYZ, this is block. This used to, by the way, you can say, what the heck is block? Block is the old Square, SQ, which was a MAXLIST stock that we made a lot of money on, okay? Is there anything here? Not really. You can say, did you really make a lot of money on this before? Yeah. Here, it's all slot, right? Right in here, I'll call it 90 up to 200 and, well, it hit 280. 90 to 280. I don't know about you, but I think that's pretty good money. Yeah. Now looking at it, there's nothing there. There's nothing there. There we go.
All right, let's sum this up. Right now, the market isn't giving us strong, high probability opportunities. We're seeing failed breakouts, rotation into defensive names, and signs of hesitation at key resistance levels. This is exactly why it's important to be selective. If a trade isn't setting up cleanly, it's better to sit on the sidelines than to force something that isn't there. Going forward, the focus should be on keeping risk manageable. Stay light, be quick to take profits, and wait for confirmation before committing capital. And most importantly, patience is an edge. The best traders don't trade just to trade. They wait for the right setups, and when the conditions align, they go in with confidence. If you want real-time market guidance, head over to missionwinners.com, where we help traders develop the mindset and skills needed to navigate any market. And if you're enjoying this content, make sure to like and subscribe here on YouTube. That's it for today. Until next time, master your strategy, trust the process, and maintain your edge.